Good morning, investors. Today, September 2nd, 2025, we're observing a neutral stance in the US stock market with underlying cautionary undertones. The global economic landscape presents a mixed picture, with robust growth signals tempered by persistent inflationary pressures. Key drivers today include the latest economic data releases, particularly those impacting inflation and manufacturing. Sector leadership remains somewhat fragmented, though technology continues to draw attention for its long-term growth prospects. Major indices are showing signs of consolidation after recent movements, hovering around key technical levels. Investors are closely watching for further data and central bank commentary to gauge future monetary policy. We expect the S&P 500 to find support near 5,200 and face resistance around 5,300, while the Nasdaq eyes support at 18,500 and resistance at 19,000. Today's economic releases paint a complex picture for the Federal Reserve and market participants. The ISM manufacturing PMI, while slightly improving to 48.7 from 48, remains in contraction territory, signaling continued weakness in the industrial sector. This contrasts sharply with a strong rebound in GDP growth rate, reaching 3.3% QOQ final, and significantly higher non-farm payrolls at 73,000, indicating a robust labor market. However, inflation concerns persist, with CPI rising to 323.05 and PPI increasing to 3.3%, alongside a stable core PCE at 0.3% month over month. The Fed held interest rates at 4.5%, but these latest inflation figures could fuel speculation about future policy adjustments. Overall, the data suggests resilience in growth and employment, yet inflationary pressures and manufacturing headwinds create a cautious bias, impacting risk appetite and potentially leading to sector rotation as the market digests these mixed signals. The S&P 500 is currently in a phase of price consolidation, reflecting the market's digestion of recent economic data. Technical analysis indicates that the index is hovering near its immediate support level, with momentum appearing cautious rather than decisively bullish or bearish. Traders are observing for a clear breakout above its nearest resistance test, which currently stands as a critical pivot point. Volume remains moderate, suggesting a lack of strong conviction from either buyers or sellers. The neutral trend seen on the charts is influenced by the mixed signals from today's economic reports. While GDP and employment figures offer underlying strength, persistent inflation concerns are preventing a strong upward move. Investors are advised to monitor for increased volume accompanying any decisive price action, as this would signal a potential shift in the current consolidation pattern. The overall outlook remains neutral, pending further catalysts. The Dow Jones Industrial Average is exhibiting a sideways movement, indicating a period of indecision among investors. The index is trading within a well-defined range, encountering overhead resistance on rallies and finding support at key levels on pullbacks. This range-bound action aligns with the mixed economic signals observed today. The uptick in manufacturing PMI, despite still being contractionary, offers a slight positive, but persistent inflation keeps a lid on sentiment. Volume has been balanced, suggesting that neither buyers nor sellers are dominating the price action significantly. For the Dow, a sustained break above its current resistance or below its key support will be crucial in determining its next directional move. Until then, the market remains in a phase of price stability, absorbing new information without a strong directional bias. Expect continued choppiness in the near term. The Nasdaq Composite appears to be undergoing a tech correction, with the index retesting its crucial support levels following recent declines. Momentum is weakening, and the index is facing significant downtrend pressure, particularly as inflationary concerns could temper growth stock valuations. Resistance challenges are evident at previous swing highs, which are now acting as formidable ceilings. Volume has seen a decrease during this consolidation phase, indicating that conviction behind recent moves might be fading, or investors are awaiting clearer signals. The robust GDP and employment data could offer a floor, but the persistent inflation reported today acts as a headwind for growth-oriented technology stocks. For the Nasdaq, a decisive move above immediate resistance, perhaps fueled by renewed confidence in tech earnings or easing inflation, is needed to negate the current bearish lean. Until then, expect continued volatility and a focus on sector-specific performance. The VIX, commonly known as the market's fear gauge, is currently showing signs of increased volatility, positioning itself within the 15 to 20 range, signaling a cautious market environment. This elevation in volatility is a direct reflection of investor caution, particularly in response to the mixed bag of economic data released today. Strong growth counterbalanced by persistent inflation. This environment tends to increase the equity risk premium as investors demand higher compensation for holding risky assets. Consequently, we are likely observing a rise in hedging demand through options activity, with market participants looking to protect against potential downside. The VIX is acting as a key sentiment indicator, highlighting the underlying market uncertainty regarding the Fed's future monetary policy and its impact on corporate earnings. A sustained break above 20 would indicate a shift towards a more risk-off stance.
NVIDIA NVDA is currently trading at 170.75, showing a recent price decline that has pushed it to the lower end of its Bollinger Bands near 169.61. The stock's relative strength index, RSI, is at 35.66, signaling that it is approaching oversold territory, which could suggest a potential bounce. However, the moving average convergence divergence, MACD indicator, is presenting a bearish cross, with the MACD line below the signal line at negative 0.27, confirming the recent downward momentum. The stochastic oscillator is also in deeply oversold levels, reinforcing the potential for a near-term reversal. Recent trading has seen a surge in volume during the down moves, indicating strong selling pressure. The current level of 169.61 serves as a critical support. If it holds, we could see a rebound. Otherwise, further downside to 160.00 is possible. The immediate bias for NVIDIA is bearish in the short term, but watch for a potential bounce from oversold conditions. Invalidation of this bearish view would occur with a sustained break above 177.12, which is the middle Bollinger Band. A recent article from The Motley Fool poses a timely question: should you buy NVIDIA stock before September? Yet to. This headline suggests an upcoming catalyst or deadline for investors considering NVIDIA. The core of the news revolves around evaluating NVIDIA's investment potential, likely tied to its robust growth prospects in AI and data centers, against its current valuation. The article probably delves into analyst recommendations, market sentiment, and NVIDIA's future outlook to help investors make an informed decision before this implied September 8th deadline. From a fundamental perspective, any news hinting at strong product cycles, new partnerships, or favorable regulatory environments could provide a boost. Given the stock's recent technical weakness, a positive fundamental catalyst could be crucial for a rebound. Investors should look for more details on what specifically the September 8th date signifies, be it an earnings report, product launch, or analyst event, as it will significantly impact the near-term outlook for NVIDIA shares. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.